Welcome back for another trade recap. Yesterday, we had the opportunity to trade ticker symbol COIN for Coinbase. I had coin on my watch list because it was approaching the 50% Fibonacci retracement. Uh, Not a heavy relier on indicators, but I do like using the Fibonacci retracement to find um, inflection points where momentum can shift strongly, which is needed for good profits, for good trading in options. Options thrive under volatility. They just are terrible under choppy price action. So coin was on my watch list. Another reason why was because it was approaching this thin highlighted zone in dark gray. Also next to it was the 50% retracement. So that's why it was on my watch list. Now, I typically like trading coin because it has a decent ATR of approximately 10 to 15 points on a good day. So good volatility for the options, both calls and puts. Uh, when coin does get moving, it does really well and it's very unidirectional. So again, good for calls or puts. So let's take a look at it. Let's take a look at the price action, sort of do a top-down analysis and why this trade was successful. Uh, so we can see that coin had some really nice aggression heading into earnings. Believe they did really well. Unfortunately, they drew back uh, after earnings, and then you can see that price started to kind of stabilize between 265 and 245. So if you understand market structure and how the market moves in cycles, then you'll understand that this phase right here was sort of the expansion phase. This is where people start becoming involved. Well, actually, both of these right here, both moves right here. After that, you want to see some consolidation where price begins to tighten up. And that's exactly what we saw in the days after, heading into the new month, right? So this range right here, you can see price getting tight between the quarter level, which is a very important pivot point. The fact that price is above it, bullish indication. As soon as we start approaching that 50% retracement, another bullish indication as momentum starts to shift towards the long side. So now that the top-down analysis is sort of established, let's take a look at it from the intraday level. Let's go over the entry, the reasoning behind staying inside of the trade for a day trade, and in fact keeping it for a swing. So here is the 10-day, 30-minute. I like sticking with the 30-minute. I think it gives you the right amount of detail, not too detailed, but it also doesn't hide away important stuff. So the 30-day, you can see that you have a move up. That's your bullish aggression, right? That's what you're looking for, especially if you're looking for a continuation. Bullish aggression, your consolidation, the fake out. Similar to the Tesla trade, this is where they're trapping people right here. After that consolidation, they're trapping, reversing the play, and anybody who may have gone short on this to play it to the downside by this moment, if they're playing off this high or this high, they're becoming anxious. They're starting to get a little bit worried, and so at this point, they're either covering. You have scalpers. You have people who are looking for momentum breakouts, all joining the long side. So we'll get closer into the 5-day, 5-minute and talk about what had happened and why I took that position early on in the day. So knowing that coin makes some really aggressive moves in either direction, once I saw it sort of hold the zone and price approaching the 50% retracement, not this specific 261.68, but just this general area, between 259 and 262. I was curious to see what is price going to do around here. So early in the morning, you can see that price held and in fact made this bottoming tail, which is to me another bullish indication, but on the smaller time frame. We have that bullish momentum on the bigger picture. Now we want to find it in the smaller time frames. So with this candle formation, there was nothing left to do but to enter with a call option. I did near the money. I did the 265 call expiring next week, mainly because we were midweek and I didn't want to get exposed to theta. I also felt like this could be a multi-day runner, and after entering, which I will pinpoint exactly where I entered. Right there, I entered at 642. This 265 call for $630. Once I got this really nice move, I honestly was not worried about day trading it. I knew that I was in a good position, that even a drawback down below this entry was going to be hard because this was a very strong move, and I had gotten in before that spike, which is also before the spike in premiums, right? So over the course of the day, I did watch over the trade as it, moved through this level, through the 270, wasn't able to tap above the 272. Did get, I guess, a little bit of upset for the amount of progress that it had given up at the end of the day. But nonetheless, the game plan was to look for a multi-day run, as it has done in the past, like this right here, like that. So that's kind of what I was looking for, and keeping in mind in the back of my head was not to get thrown off by the smaller price action, and just understand that I had taken a great entry and I could afford to stay in the trade long enough, especially with only taking one contract. I wasn't afraid to stay in it and be able to react to the price action. So this morning I exited the call option right here, somewhere around right here. I exited for a net gain of $710 on the call option, and that was approximately at 632 right there. Now I could have waited to see if it could go further, but I've made it a rule that when I do swing options, I try to close it almost immediately, regardless if we get a spike in the direction of favor. I think it just makes it easier on yourself, just setting those rules and following them. Otherwise, you're out there with no guidelines, no rules, and it just makes trading unsystematic. So it facilitates it. Make sure that you have a process in place, and it keeps you in line. On another note, I also traded MRNA with a debit spread. This is sort of a similar trade. So I won't go too into detail, since this was just a single debit spread for a net gain of $207. But I also want to explain or go over it simply because I also use the Fibonacci retracement along with some other key signals just on raw price action that helped me take this trade and almost collect 100% of the max potential profit. The first thing is that on this trade, we can see again price getting into a range. So one thing about range is that it respects the supports and the resistance zones for the most part. So I drew a Fibonacci retracement from the swing low to the swing high, and was just using that. Again, I'm interested in looking for that break above or break below 50%. Again, why? Because it is a shift in momentum. So above the 50%, longs are in control. Below 50%, shorts are in control. The other thing was that I was using these little highlighted regions as points of control. Uh, One thing that I've learned is that these areas uh, can be used uh, as a way of understanding, um, where market makers or other position traders are, trading off of. So these are all sort of reference points. So with two of these points being located near the 50%, I knew that the break above 381 would allow room up potentially to 402. So once we got above 381 is around the time that I entered. In fact, I entered right here, right as soon as we broke that 350, I entered right here with a debit spread. Now, the call option that I had bought was the 385. I sold the 390. That just seemed like a really good debit spread, considering that there's 2 days left into the week, and that 390 was not far, especially with MRNA, which has a high ATR. And you can even see, and remember, all these levels are preset. I'm not setting them; they're already in place, and I'm trading based off of them throughout the day. So if I would have bought a naked call option, I know these went up over 100%. But unfortunately, I did debit spread again just to minimize my risk, just play conservative, take what I can, uh, trading stress free in a way, knowing that if the trade goes against me, it won't put me in a position that I can't recover from. Uh, I did try to exit up here, but I couldn't get filled. The spreads were just super wide. I believe that the spreads were nearly, uh, yeah, I don't have that yet, but the spreads were super wide. So I did set a limit order for a sell at 395, and eventually it got filled around this time period right here. So that was a net gain of 207. So all in all, we're looking at approximately $920 in these two trades, which, quite frankly, very conservative, not aggressive. Just taking trades that are high in probability of success, low risk to what I can manage. Um, some people like to size in with lots of contracts. I rather not do that, instead be able to, stay in the trade longer and handle my emotions a lot better, which I think goes unsaid far too often. Eventually, I do want to scale up, with higher positions. But as of right now, this is what's been working and been bringing in, consistent gains, and that's what I'm looking for. Small winners every day, and be able to take it home. So if you guys have any questions, you can drop it down in the comment section. Looking forward to making some more of these videos and kind of provide the thought process behind the trades, and sort of just trading on raw price action, sentiment, and levels, and uh, you know, most importantly, taking positions that you can manage and manage the risk accordingly. So thank you guys for watching, and then we'll see you guys in the next video.